What's up, everybody? Good morning, good afternoon, good night. Welcome to the BitLab Academy Alpha Series here on BitBoy Crypto. We had a wonderful guest last week in Jordan Lindsay talking about when the bull market truly starts and how we can make sure that we are in position so that we can dominate these markets instead of letting the markets dominate us. So hit that like button, hit that subscribe button, ding the bell, get involved here. And if you haven't yet, make sure to check out the BitLab Academy daily stream over at youtube.com/@BitLab Academy. Join us in our community there. And all of you here in the BitSquad, thank you for tuning in. And I cannot wait to introduce you to our guest, Mr. Mark Yusko. So before we dive into our guest, make sure you hit that like button, hit that subscribe button, ding that bell. Make sure you can get involved with the community here. But before we do that, my name is Kelly Kellum, and I'm just honored that you could be here. So let's go ahead, dive in with our guest. How you doing, Mr. Mark Yusko? Thank you for being here. Thank you for your time.
No, great to be here, Kelly. And I appreciate your nice way of saying I'm old. I have the white hair to prove it. And it's okay. I wear it as a badge of honor. It means I've survived all those things that came at me all these years. And, one of my good friends has this great line about investing. He says, with every investment, we get richer or wiser, never both. So, we learn from our mistakes and we rebound from them. So I just been a good survivor all these years.
Well, I appreciate that. And I think, I think the first time you really jumped onto my radar was an interview that you did on Crypto Banter. It must have been 6 months, or it's probably about a year ago. And you made my favorite comment, which I have parroted time and time again, which is when we talk about the difference between asset classes and how, you made the mention of if dresses go on sale, think about Black Friday in America. People run over each other to get a 20% discount, but you see something like the best emerging asset class in the history of the world go on sale, AKA markets are pulling back and people run from it until it gets very expensive again. So what would you say to people in this space, whether they've been in a day, a month, or 10 years, because the emotions never go away. The struggle with trying to make smart decisions never goes away. Yeah. It's all about the strategies we put in place. But what would you say to somebody that's fighting off the boredom right now and they're so frustrated with the markets? How do they contend with that and look at this like it's on sale, or, allocate their strategy in a way that serves them?
Yeah, it is the, $64 trillion question. And, the line is that investing is the only business I know. I've been doing this a long time. It's the only business I know where things go on sale, everyone runs out of the store. And the cheaper the price, the further they run. And to your point, in every other business, you put something on sale, people will run over each other to get it. But in investing, for whatever reason, when the prices start going down, people run away. I find this cycle will get exacerbated and get exaggerated. And then when price exceeds fair value by so much, investors turn around and say, I'm out. I'm going to rebalance, because if I bought it early, now my weighting is really high relative to my anticipated desired weighting. And so I'm going to sell. Well, that triggers the downward momentum. Then the short sellers come in and they push it back down, and then people get margin called and we get the collapse. But that's when the cycle starts all over.
Let me ask you a question here. I want to shout out especially to everybody from the BitSquad that's still I want to shout out especially to the BitSquad, watching this. And I want to invite you over to the BitLab Academy to watch the full length of this interview, because it will continue on for another 30 or 40 minutes. So definitely come over there. And before we let the BitSquad go, I wanted to ask your perception on, or perspective, I should say, on the cascading, just overwhelming best news in the history of Bitcoin. Some people think about all these spot ETFs sort of cascading in, especially I think everybody talking about BlackRock. Do you think, you talked about this sort of, I don't want to even call it immaturity, but I'll call it the immaturity of the investors in the Bitcoin and crypto space. Do you think that as the stamp of approval effectively has come from Larry Fink and BlackRock and institutions and smart money and real professional traders are coming in, do you think that that's going to change the dynamic of how how the price action moves because there's going to be a little bit more maturity coming into the space? Or do you think it's going to move in parity with, as those new people come in, also the awareness of Bitcoin and crypto is going to exponentially grow? So we're still going to bring in a lot of people that have no idea what's going on either. Like, how do you contend with the change once institutions are involved?
Look, it's a fantastic question. And it kind of goes to the heart of where we are in this evolution of the cycle and of the technology. So if you think about how every technology comes into being, they all follow an S curve, right? So it looks like a big letter S. And, the first 10% come in over the first decade. Then the next 80% come in over the next decade. And then it matures over the last decade. And you go from, the originators to the early adopters to the early majority. And then you have this inflection point. And I think we're about at that inflection point, because the first 4 years, I don't really count them because it was kind of a science experiment and there was like 7 people involved, and last 10 years it's real. And
right.
So
especially this whole last cycle too. Yeah.
Yeah. Yeah. And so we're at that inflection point, and yes, institutions theoretically are better decision makers than retail individuals. The problem is a lot of institutions suffer the same problem because they're run by small groups of humans. Yeah. And those groups tend to make equally bad decisions. The pension funds in particular have a long history of being just as bad as individual investors. So I don't know that the institutional money coming in is going to be quite the panacea that everybody thinks. The thing I think is interesting is...
I got to pause you there for just 1 second, just because this came into my mind, and I think you'd be the best person to ask this. A lot of people that I talk to are also wondering, along with institutions, if they're so traditionally long time horizon investors, is there going to be a weird sort of dynamic of trying to figure, especially because this is an emerging market, are they still going to be long time horizon investors, or are they going to be hedging and taking percentages? Like, are they going to be trying to buy near bottoms, or, a confirmed start of a bull market and starting to, to level, layer out near a top, effectively potentially truncating an exponential growth cycle, or them being involved? It's kind of a perplexing.
Again, another good question that's complex in the sense that not all institutions are the same. Right? There are long duration investors like endowments, foundations, some pension plans. There are shorter duration institutions. I mean, BlackRock would be that, right? An ETF is not a long-term investor, right? It's a daily liquid, tick by tick liquid asset that the institution BlackRock doesn't make the decision. It's the masses come in, the masses go out, assets go in. Look at ARK, right? It can go, lots of money can go in, lots of money can come out. Now, the scary thing to me is, despite losing more money than she made, more money still going in to that ETF. So I don't really understand that. But the institutions are very varied. And if institutions like Citadel, right, which are the ultimate high frequency traders and day traders, come in, they have a fractional of a second hold period versus, Yale might say, I want to hold this for 10 years, or, I might say I want to hold this for a decade in my venture capital fund, which we do. So very different. And the other thing that I think is interesting is this is not new. We've seen this before. GBTC was the perfect analogy. We know what happens when a institution, right? GBTC was a Cayman trust. That is a institutional pool. funded with all of this other individual retail money. Now, it couldn't be retail at first because you had to be a qualified purchaser, and then qualified investor, and then you had to buy it in the private markets. But then a year later, you could sell. So then people could trade it in their PA. Well, what happened? We hit the $10,000 fair value, and then we went ballistic. I mean, we went straight up. Yeah. And everybody's like, oh, that was Michael Saylor and this. No, that was GBTC getting bought every day. Their asset base went from nothing, literally nothing, to I think 20 plus billion at the peak. And the thing about the people forget is when the asset was 200 billion, and 20 billion comes in, you're like, oh, that's not that much. No, it wasn't 200 billion. At least 150 billion of that 200 billion was never going to move. It was the lost or stolen and the stranded and the hodlers and the people who are still accumulating. It was maybe 50 billion of free float, 20 billion on 50. That's going to put some serious pressure. Now we got this again. We got a $500 billion asset, and 100 billion of it is probably the free float. We're talking about 30 billion. If 0.1% of the 30 trillion of assets that are engaged in ETFs, is according to Eric Balkunis, who's an interesting analyst, 30 billion on 100, that'll move the price. But what if he's wrong? What if it's 1%? What if advisors like, I have an advisor and I haven't been allowed because, UBS doesn't allow you to own anything crypto related. When this thing gets approved and it's a BlackRock fund, they're going to have to let it be approved. They're not going to be able to say no longer. And then I'm going to put at least 1%. And if everybody puts 1%, now you're talking 300 billion on 100 billion of free float. That'll move price a lot. So, but the other part of your question that's really, really insightful is those institutions also hedge. So we've seen that, right? When the futures ETF was released 2 years ago, prices started to go down. Well, wait a minute. I thought people were buying Bitcoin.
Yeah.
No, they weren't. They were buying paper, representations of what could have been a Bitcoin, but there was no physical demand for spot. And the big banks were shorting, which is what they do in futures markets where there's the ability to create paper goods. Oil markets, gold markets, silver markets, palladium markets, all these markets have an element of manipulation, which is the word that, Chairman Gensler likes to focus on. Like, dude, you think the crypto market or Bitcoin market is manipulated? Have you looked at the triple leveraged VIX ETF lately? You want to talk about manipulation, or the ETNs that trade in agricultural futures or gold? GLD has been spoofed for years.
Hey, Mark, I'm going to pause you right there because we're going to wrap up the BitBoy stream. And I just want to encourage every one of you to come over to BitLab, watch the full length here. And before we do that, before we go from this BitBoy stream, I do want to say, make sure you head over, give me a follow right here at Kelly Kellum. Make sure, more importantly, you follow Mr. Mark Yusko right here at Mark Yusko. You can find more information on him here, as well as his company, Morgan Creek Capital. A lot of stuff going on over there. Mark is probably one of the most insightful and giving people in the space in terms of the content, the thoughts, and the time he shares with so many different content creators. And I think it's phenomenal because he provides such a balanced thought about what's going on with markets, both traditional assets and with Bitcoin in the digital asset space. So definitely check that out. And before we do go, I just want to take one moment really quick because there's a huge thing that's been going on over in Maui. And I just want to shout out really quick. I have about probably 12 to 15 family members that live there and about 100 close family friends. And so just really quick, just showing here, my cousin has set up this GoFundMe to help raise money. About half the people I know over there have lost every single thing that they have other than maybe a backpack with 2 or 3 items of clothing. So one of the things that he said, which is quite insightful, is this right here. And it is, this is a long-term mission. Thousands of people have nowhere to live. The ones who still have a home lost their jobs. The jobs all burned down as well. So if you find it in your heart, definitely go and check out. I'm going to put the link up right here, tinyurl.com /Maui fire victims, trying to raise money to help people have a sandwich to take a bite of. Throw a sandal on their foot, anything they can. So if you can find it in your heart, definitely check that out. Again, it's tinyurl.com/Maui fire victims. And if you haven't yet, make sure you check out, thank you for being here with us. Make sure you check out bitlabacademy.com and as well as youtube.com/@bitlabacademy. Follow us there. Mark, I appreciate you again beyond anything I could say. I'll let you go. We'll see you on another time in another universe, hopefully within this galaxy of digital assets. And I'm riding the rocket ship with you. So I hope to see you up there and give you a high five when we're up there round and around the moon on the way to Jupiter. So I'll see you next time. And I'm going to move on with the rest of the community. Thank you, brother. I really appreciate you.